on Facebook. No, we're going live on YouTube. Should we go to Facebook? Should we let Facebook listen in? We should let Facebook listen in. It's the nice thing to do. Zuckerberg likes watching with his morning or midnight wine. All right, let's go ahead and start off. Okay. We're good? We're good? Live? All right. We're good. Ladies and gentlemen, front running, what it actually means when you can apply it to the algorithmic strategies. We're going to talk about all that and more. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I have so many great things to talk to you about today. Well, maybe not so many, but definitely one. And we're going to talk about front running today. And this is not the front running that is also known as tailgating. It's not the prohibited practice of entering into a stock or option or future contract or derivative or security based swap to capitalize on advanced non public knowledge of a large block pending transaction that's going to influence the underlying security. It used to be back in the day that these brokerages would get these very large orders from clients, and they would, for example, get somebody who's saying, "All right, I'm going to buy, 2 million shares of AOL. Can you execute that for me?" So what the brokerage does when they know they're getting an order to execute 2 million shares of AOL is they front run it. They either front run it themselves for the firm or for a client. That's why it's a prohibited practice. So what they'll do is they'll buy the initial 10, 20,000, 30,000, 50,000 shares, and then they'll just execute a 2 million share running order to just take a huge amount of size, which they know will drive the price up, making it practically inevitable for them to make money. Another form of front running is what a lot of the a lot of the prop firms do. What they'll do is they'll have algorithmic based programs. They'll track their top traders. And what happens is, as the trader pushes in an order, and this is also more of a frowned upon practice, this sort of front running, is they'll actually, you'll hit a market order to buy. Let's say you're an extremely consistent, profitable trader. What they'll do is, if the trader, let's say, buys, let's say 5,000 shares on a market order, they'll jump in a microsecond before, snag some shares, the market order goes off, and they'll just quickly sell it right away, just catching that little in-between action and making it virtually guaranteed that they'll make money on the trade. That's one other way of front running. The other way of front running was when I was back in high school and people were walking around with like Bills jackets, like Buffalo Bills jacket or Dallas Cowboy jackets, or you've probably seen it around your neighborhood, even if you live outside California, people with Golden State apparel because they follow the Golden State Warriors. And they're such a huge fan now that they won the NBA championship a couple of years back that everybody has to have their apparel now. Yeah, this is not that sort of front running either. This is more of the non-frowned upon front running that you could do to take advantage and ultimately boost your P&L. I'm here to help you boost your P&L. That is what you are here to do. And my day was boring. And I'm going to show you how to front run some of my own trades because the truth is, traders in my room front run me all the time. Why? Because they have the information of what I want to do before I actually do it. Most gurus out there that I have met, and again, not me, Mark Melnick. Yeah, sure. They'll be like, okay, I'm buying a stock at $20 with a target of 21 and a stop of 1950. But what they'll do is they'll buy in the 1990s, for example. Why? Because it gives them a little bit of a better trade. And for some reason, for reasons maybe the trader might even have trouble explaining, they really feel the stock was going to get to that $20 level. And had it not, the trader would have been fecal matter out of luck. And if the stock did get to 20 and then burst through, the trader would have obviously a better average price. By watching this show, you are agreeing to hold me, Mark Melnick, and T3 Live, harmless and not responsible for anything. If you do not agree to that, leave. And if you do agree to that, just keep watching because there's no signed contract that uh, you must hold us harmless and not responsible for anything. Okay, this is for education and do you consider this entertainment? I mean, I'm not really here to entertain you, but if I do, great. Why not? If I'm here and I make you smile, great. If I'm here and you just thought about a new way of doing things to make yourself money in trading, great. I am definitely here to do that. So, I want to talk about how a lot of hundreds and hundreds of traders here at T3 Live, how their day actually began and ended. And it started off this morning with this is a 1 minute chart of Apple. Nothing much, right? Looks kind of choppy. Just ignore everything on my screen. Ignore all those fancy lines because obviously, obviously there is no reason to have moving averages and VWAP and pivot points. Obviously, it's just all nonsense and it's just all this clutter on the chart. Yet we're pulling out more consistency than everyone else out there because we're keeping things stupid, simple, with modest expectations. Stupid, simple, with modest expectations. So this is what we did today. Because Apple gapped down today, it opened up $2.31 lower. We were doing a one and done short. Now you might say, well, Mark, what on earth is this one and done short? Well,
Now you notice, like,
it's
sure,
pretty simple. It's just basically, for the most part, just shorting for the first break of a 1 minute candle in this case. That's all it really ultimately is. There's a whole video on the one and done out there. It's not like a secret strategy, but for some statistically beyond my wildest dreams, the one and done short in Apple and one and done long in Apple have been working for me with phenomenal consistency. As of this moment, I'm batting 13 out of 15. So I did it 15 times, and I learned the lesson how to avoid one of those two losses that I actually took in it. And the other one, I actually learned another lesson to go for the correct option because it actually would have made money. So amazing how even those two losses were a beautiful learning lesson. And if you think 13 for 15 is too small of a sample size, this thing has been back tested all year. If you're hitting 13 out of 15, you're batting 86%. You're batting 86%, bottom line. So what did we do? What is the great genius? What is the great complexity? There is no complexity. You could be the biggest idiot in the world. You could have been like, Mark, I am a product of doing whippets every single day in college for 8 years straight, and I flunked out, and you'll be able to do this strategy. If three of your brain cells survive the barrage in which you put upon your brain, you'll be fine. So what did we do? We wait for the first break of the 1 minute candle. Happens right here. You see the 1 minute candle breaks down for the first time. It broke a prior candle's low right over here between 932 and 933. The bid was at 206.27. The stock opened up at 206.33 on the 1 minute candle, went to 206.47, and then dropped. Target was day lows. Not a big target, right? I mean, I was looking for more, and I'll explain how I said it. But you short 206.27, you look for a target of 206.11. Mark, that's 16 cents. Like, I'm not here for that. I want to make dollars and dozens of dollars. And if you're one of the human beings that share that mentality and act upon every single one of your trades with that mentality, odds are you're part of the 98.8% of people who are failing out there, regardless of which shiny guru you're following, which cool, whatever, Ferrari, yacht, multiple cars in the garage. I mean, I'm guilty of at least one of those things. You're following somebody who's not going to help you make money. I just want to show you and ask you. So when we shorted through 206.27, I said, look for a break of 206.11, look for a quick flush under 206, and I'm going to dump my position. So not only that, I'm spelling it out for you before I even open up the trade. So I was looking for a break of 206 and a flush under 206, and then to get rid of my puts in this case, if you're trading common stock, the majority of us trade common stock. I don't want to make you guys think that I'm a solely option room, but here's the thing with Apple. If you had a $500 account, you could be part of this trade. You could easily be part of this trade. If you had a $200 account, you could easily be part of this trade. $200 account, Mark Melnick. Apple's a 200. It's an over $200 stock. I can't even buy a share or short one share. That's right. But you could buy a couple put contracts. Would you hit a home run on a $200 account buying a couple put contracts? No. But you could make your 35, 40 bucks. Yeah, I just said that you could make 20% of your money on a trade like this. Are you scoffing at that? Are you scoffing at that? You threw $10,000 worth of options on Apple. You could come out with between 1,500 and 3 grand on a play like this, trading through puts. You want to be like the majority of prop traders out there trading common stock? They scalp it and go home. We have the laziest, most successful prop traders on the planet in our room. Why? And you don't have to be a prop trader, obviously, to short Apple, but prop traders have the buying power, and that's the beautiful thing. Nothing more than I love than creating a successful prop trader, because prop traders fail so hard. So hard. If you're a prop trader, if you got sucked into the prop trading thing, oh my goodness, you are a living ticking time bomb. You are a living ticking time bomb. Because month after month after month, you're paying these fees, these dues, these fees, these dues, and you have the buying power to potentially make it. But if you're not batting consistently, you're done. And then how many times are they going to come to you with the phone call? Yeah, Mr. Anderson, Mrs. Smith, you're going to have to send us another check. How many people have went through that in their careers? The prop firm's asking you for another check because your account balance is running out. And I'm trying to prevent that forever. See, I'm trying to create the happiest relationship, and every prop firm out there wants you to succeed. Let's just be perfectly clear. Not one prop firm out there wants you to fail. You're just put in a situation where the odds are pitted against you. So, I'll tell you a story about a prop trader. To mask her name, I'm going to call her Susan. She's a prop trader. She's a real person. She's a real trader. This is what Susan did today. That's not her real name, by the way. She shorted Apple through, she's a Newsbeat Live member. She shorted Apple through 206.27 right here, waited for our call under 206 at 205.83. She made 30 cents on Apple. She has $250,000 in buying power. She's there to use her buying power. She took 1,000 shares short. She made $300. She logged off her system and she called it a day. She trades from home. She has, I guess, prop traders have access to trade for home, depending on which prop firm you use. I haven't traded prop in like, oh my God, such a long time. I made so much money trading prop too, but it was I literally had to move and then they didn't want me to trade from home. Old prop they don't exist anymore. Now the guy is actually I don't want to drop his name because you'll know what firm he's from, but the guy's doing very well today. With that being said, just a simple Apple is going under 206 here, and shorting Apple right over here to get the move to 205.83 is all she needed for the day. Now you might be sitting there, I don't know who you are as a trader, but $300 on Apple for a quick 1,000 shares in, 1,000 shares out. She didn't pay a ton of commissions. She locked in 300 bucks. That's 6,000 a month, $300 a day. And she makes more than that on other days. Apple's an expensive name, but that's all she's been doing for the entire month. And she's batting in the 90s at a prop firm. In fact, her prop firm told her that she is the most consistent trader in the firm. And no, she's not even remotely close to the most profitable trader in the firm, but she's brand new. She's a brand new trader. And she's doing this stupid, idiotic, imbecilic, Any dumbass can do it. Excuse my language. Strategy, as in terms of the donkey legal definition term of the whatever, the Webster's dictionary term for a donkey. She's doing this dumb donkey strategy, and she's done. She made $8,000 on her first month of trading. Zero nonsense, zero stress. She trades on average 5 minutes a day. 5 minutes a day. 25 minutes a week. She worked 100 minutes. According to her, I didn't sit here and like, when did you leave the office, Susan? 100 minutes for the month of August she worked, and she made money as a brand new trader and prop trader. She didn't even have the money to open up and have the buying power. She dropped 10 grand. They gave her 25 to 1. Again, I don't know what, I'm sure other prop firms, if you have a track record, they give more. I mean, that's up to every firm individually. But she had the money to do it. So she turned 10 grand. She made 80% of her money in a month. She has zero stress. She thinks it's the greatest job in the world. She loves it. She's a member of the Newsbeat Live Room. This move right in with puts and Apple, you can take as much Apple as you humanly want. What I do is every time I win, this is the first time I tried it short. I've been doing Apple long, but this strategy works, and it has one of the highest hit rates I've ever seen. So maybe all this education is mostly nonsense, mostly BS, mostly anybody who tells you the Bulls or the Bears are in charge based on a candlestick is basically defecating out of their mouth and covering you in something that doesn't smell good. Oh, the Bulls are in control here. Look at the big green bar. Who says that? Are you kidding? Oh, Doji. Nobody knows what's happening there. It's indecision. Oh, look, the Bears took over now. Oh my God, what am I going to do? How about you cut the nonsense, you cut the BS, and you just make it simple and easy. Yes, this 4-minute trade is all you needed to make money today. And I keep going back to the Bitcoin because, again, I want to show you what true technical analysis is supposed to look like. Remember I said I would keep coming back to this, whether I was right or wrong? You could watch the video. It was from last Wednesday, right? From Wednesday of last week. And I say, I'm going to, right or wrong, I'm going to keep coming back to this chart to show you where you could buy Bitcoin. And some people thought I was being mean about it. Mark, you're not giving us a stop loss or a take profit. And I'm telling you that that would hurt you by doing that. And people think it's helpful because many traders feel the more information they have, the more it helps them. Wrong. Because most information will destroy you. Quite the opposite. You want to know who the least successful traders are? The ones who have education from here, there, have taken 10, 20 courses. They should be the best traders in the world. They've learned so much. They spent so much time. There's good time spent and there's bad time spent. So what is front running? How do you front run? How do you ultimately, you're batting 9 for 10, Han, in the Apple one and done? You could do better. It's someone from the room talking. Anyway, doesn't matter. Doesn't matter. How do you front run? Well, I'll give you an example today. When we were trading Snap today, we were looking for a Mark 5 long. The Mark 5 long was going to be a break of 33 cents for a test of day highs at 1640. It actually ended up coming up here. I actually sold this for approximately break even because the market started doing this. As soon as that red bar came in the market, I was like, bye-bye, Snapchat. Bye-bye, Snap. And I literally just dumped my Snap for about break even. I think I lost $20 after commissions. Point being, on this Snapchat here, the the goal was the Mark 5 says you're supposed to buy right here on the 5-minute chart through 1633 for a target of 1640 and potentially beyond. In this case, it didn't go beyond the market, as you, if you weren't watching today, plummeted. And I love, and people are all like, not many people will actually share a losing trade with you. Not many people will share a losing trade with you unless it's covered up by a bunch of winning trades around it, because that makes them look good. Oh, I have $1,000 win here, $2,000 win here, $1,000 win here, $2,000 win here, but a $300 loss there. That $300 loss looks like gold, but they'll never sit there and highlight that $300 loss. I want to highlight this $20 loss because it's going to help me teach you how to front run. So this type of front running is you'd buy through 1633 between 9:45 and 9:50 a.m. That's the 5-minute chart right here, right over here, in which you would buy it. But I want to show you on the lower time frame how you can actually front run. So the front run on the smaller time frame actually was actually very easy to spot, because you're buying right here on the 5-minute candle through 1633, but on the 1-minute candle, you saw it start holding the exponential 8 and going up. So if you're actually tracking Snapchat on the 1-minute candle, you could have started buying for the break of the 1-minute candle as it was approaching 1633. Even over here, you could have been buying Snap through 16 and a quarter as opposed to trying to buy through 1633. And you might be sitting there thinking to yourself, well, it's not a big deal per se to buy it at 16 and a quarter as opposed to 1633. Mark, it's only 8 cents. And maybe with, however, it moves quick, maybe even I'd only catch 6, 7 cents. That differential can be the differential between you being a wildly successful trader and just a successful trader. On 100 contracts, Amy, it's huge. You got the picture now. On Apple, there were other there are other Mark Fives we did as well. I'll show you one that I wasn't part of that somebody in the room just said they made $1,000 off of, so I'll just use that as an example. I would, buying the medicines company right over here through 45.24 right over here, and it went to 46.06. Again, modest scalp, little 80-cent plus move in 10 minutes. Doesn't seem like a lot, but right over here on 45.24, what you'll notice is you could have actually bought it as it was digesting up off the 21. You could have actually been buying this thing through 45.09. You could have actually been buying it through 44.63. You could have been buying it on the 1-minute time frame. So what happens is a lot of times in the room, you traders will hear me that I'm front running. Psychologically, this is what the front run sounds like. And I will show you and I'll spell it out for you so it's very easy. Yeah, glaring whiteboard. All right, you have like any failing community. For example, let's say there's a trigger at $50, right? And they'll give you a stop of 49.50, and this is just making up a situation, 51. The reason I've explained in so many videos why this methodology fails for the majority of people. And if it works for you, God bless you, you're one of the few. Okay? You're one of the few. So you're trying to, let's say it's a buy trigger, it's just so no confusion here. But here's the thing. You see the stock, and just hear me out as I say this, right? You see the stock. The stock is at 49.75. So let's just write that in. Current price of stock, 49.75. That is the current price of the stock you are watching. And you know that you're going to buy it through 50 bucks. But as you're watching it, you're looking over at the Qs, the spiders, the diamonds, the IWM, whatever ETF might be propelling, whatever ETF might be propelling um, your stock. So, for example, if you're watching Citigroup, spiders are a great ETF to watch. Citigroup. If you're watching Apple, for example, or Google or Amazon or Netflix, the triple Qs would be weighted with one of those names. So let's say you're watching, again, we're making it up here. Let's say you're watching Facebook and it's a $50 name, right? You're watching Facebook. So here's how it works. You're watching the Qs. You see it ticking higher. You see the triple Qs, and you should have multiple level twos on your screen. I don't know how people do it with just one. You see the Qs or a chart of it. You see it going higher, and you see your stock going from 49.75, 49.80, 49.82, 49.83. You see it ticking higher. You see the level two of the stock moving with speed. It's not slowly grinding 49, 75, 76, 77, 78, 79, 80. It's like 75, 80, 82, 84, 89, 90. It's like moving quickly. Your finger is on the market buy button. You want to buy that $50. You have the number of shares or option contracts or whatever you're doing to play the $50 Facebook from many years ago. You want to buy it. And you're waiting for that $50 to hit. You're waiting for the $50 to hit, but now you see the level two moving with speed. You're watching the cues. You see it going up. You buy in, for example, at 49.90. If you were to do that trade right there, many of you would be saying to yourselves, that's a difference of 10 cents. It's not a big deal. I took 3,000 shares or 10 contracts or 50 contracts or 100 contracts. It's a dime. I took 1,000 shares. It's only $100, Mark. No, it isn't. It is way more than $100. Mark, you know, I learned that in, third grade math. It's not more than $100, Mark. 1,000 shares at 49.90 to 50, that's 10 cents. Psychologically speaking, you are in such an advantageous scenario when you buy it at 49.90 as opposed to 50. Because what happens is if the stock starts fluttering, sometimes it'll pop through 50, it'll run, it'll pop through 50, it'll pull back, whatever it does, psychologically, you're going to have a fortified mentality for your next trade by buying in at 49.90. Not only that, if you were to buy it at 50, for obvious reasons, you might get slippage. Maybe you'll be too slow and the robots already blasted it up through $50. That's why we're talking about front running the robots. Because you already know if the robots hit $50 that it's going to explode, especially if you're applying a Newsbeat algorithmic strategy. And we give you a buy trigger, you know you're going to have movement there. It's just a matter of how big, how much, how fast, right? And that's all depending on other factors as well, like what the market is doing, what the cues are doing. What I would recommend if I were me, which I think I'm me, I have no proof though. I cannot verify that I am me. Is I would do half size. So let's say for me, my preset's 100 contracts. It doesn't matter what your number is. Let's say it's 10. Let's say it's 10 contracts, right? And you're buying, or 1,000 shares. You're buying 1,000 shares of Facebook at $50 with a take profit target of 51, which is again, literally what I want you to do with these things is look how much pain you had to suffer in this trade. Because I guarantee you, if you bought the stock at 50 and it went to 49.60, you'd be feeling like dirt. Trades, winning or losing, should never make you feel like dirt. It should never make you feel bad. Literally, just write down every time you see it and tell me how that works. Write down every single idea. Don't take any of them, but just write them down and tell me how it felt. Tell me how it felt. So when you're front running the stock, what I would do if I were me, because I can't tell you to buy or sell a security, even though if I told you to buy Facebook at $50 and you got to fill, you'd be up over $100. That'd be amazing. The thing is, I would do half size. So let's say you wanted to do 1,000 shares at 50, do 500 shares at 49.90. I think you'll be in a better situation. Get used to it because here's the con of everything. The con, that's the only con. The stock might not hit $50. You're actually making another bet on it. You're actually making another bet that the stock might actually not hit $50. And if it doesn't, and the stock starts obviously pulling down, because if you buy at 49.90 and it's not hitting 50, it's very unlikely stuck at 49.95. I guess that's possible, but the stock might not hit $50. So let's say you took the 500 shares because you saw the Qs going up, you saw the level 2 moving, accelerating towards the level. I would start with half a position size. I would start with half a position size. Um, let's talk about that. So you buy 500 shares at 49.90. Scenarios. Stock hits $50, runs up to $50.50. In a very optimistic scenario, you are up $300 because you're up $300 as opposed to $500. Scenarios. You front run 500 shares at 49.90 as opposed to buying 1,000 shares at $50. Okay. Here's scenario one. Stock hits 50, runs up to $50, 50, you're up $300 as opposed to $500. Scenario two. Stock hits $50.10, drops down to 50, you become uncomfortable and dump it for a $50 profit. As opposed to stubbornly holding because you are break even on the trade. From there, stock goes up or down from here. And it was either a good hold or a bad hold. The worst case scenario is you buy 49.90 and the stock drops right away towards your stop. And please notice that I'm saying that you sold halfway even towards your target because just keep in mind on this that as you're doing this, your buy trigger is 50, your stop is 49.50. So you buy at 49.90, the stock drops right away towards your stop of 49.50. You lose $200. Okay. Now you might be looking at this and say, yeah, Mark, your math makes sense, obviously. But what you are not taking into consideration here is the inevitable psychological toxicity that you were able to put yourself in the second case scenario. Had it popped up quickly, you didn't sell for a quick 10-cent profit, and it drops and heads lower. And this is a very big thing because people really underrate the power of being in a psychologically advantageous position. I'm going to call it a PAP. And it doesn't mean anything else, you crazy people out there. I'm going to call it a PAP, a psychologically advantageous position. Now, I don't always front run, but when I do, I prefer Dos Equis. No, I don't always front run, but when I do, it tends to work. So what I did today for you is I showed you my OODA loop, my psychological loop of what actually is going through my brain as I do decide to front run. And it's simply, in other words, this. In other words, it's this. And you might be sitting there like, Mark, why wouldn't you just buy 1,000 shares at 49.90? I would, because I'm good at it. I'm saying if you're new at it, tear down is the point I'm making. So there is no reason not to take 1,000 shares. But this right here, to avoid this sentence right here, is critical to your long-term success. It doesn't seem that way, but that's critical to your long-term success. So when I'm on the mic and I front run, I tell you guys that I'm front running. I'll tell you guys that my trigger is here, but if it breaks this level, I'm going to enter in. And I did it the other. Did I do it when I was shorting? Did I do it like on Alta last week, or was it one of the other names? I did on one of the other names and it worked out beautifully. Front running does make sense. I tend to look at it for a 1 minute break. If you're using a 5 minute chart, switch over to the one and look for a lower number in which you could buy through or a higher number in which you could short through. It's little things like this that create millionaire traders. It's little things like this that create consistent traders. Take it from me as one of the most important lessons that I've ever learned. Did you enjoy this front running video? Maybe you did. Thumbs it up. Let me know that you like it. Let me know your thoughts on it. Because ultimately, this content is completely designed for viewers like you. I hope you guys enjoyed the Newsbeat show. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.